Witam Państwa.
Good afternoon, ladies and gentlemen. This is a conference dedicated to the outcomes of LPP after the 9 months of 2019. We have several important events to report, but let's start with financials. We have the new first slide because we have expanded our online presence so much, we had to divide our business into two parts. So we have traditional offline business, and we had nearly 1,750 stores. LFLs was positive, over 5%, and the floor space grew by nearly over 12%. We also had our online business, 30 countries covered, nearly 50% growth year on year after 9 months. So some of you may say that we have 24 countries offline and 30 countries online, but in total we have present in 39 countries. Well, this is the map to illustrate the situations. The blue color means the online stores. So online stores are in those countries. And here you can see the EU countries where we've opened our online stores in the third quarter of 2019. And the gray color shows you countries such as Bulgaria or Kazakhstan, and we have only traditional stores, offline stores opened. We don't operate online there as well. And the green color, so these are the countries where we are present online and offline. So this is where we operate online and offline. So opening of a new country, new store is an opportunity for us for further expansion, for checking, testing the markets and the situation. We'll be talking about that more later on. Here in the table, you can see the growth of our stores year on year, over 30 stores, and the biggest numbers of stores were opened in Sinsay. Now let's move on to LFLs and e-commerce growth. LFLs grew by more than 4% during the third quarter, and July was more or less a weak month because we had to sell off our spring-summer collection. We had more items because the weather in May wasn't that good, so the results weren't that good. And so July was a sell-off, but starting in August, we introduced the new collection. So August and September, especially September, came back with good results for our new collection. We are very happy that in our offline business, the biggest growths are in the biggest growing markets, so Russia, Ukraine, and Romania. And we are still happy about our growths in Germany and the UK. So on the right, you can see the online sales. Year on year, we have a growth by over 50% in the third quarter. And because we are developing on the new markets, but we are also growing on those that we've been operating on. So after the three quarters, the growth was over 10%. And we have to remember that as far as online sales is regarded, the third quarter is usually the worst one because this is when our online users go for holidays. But starting in September, the sales are growing very dynamically. So what was the sale growth in all brands? All brands recorded growth of sales in the third quarter. And here we have one important thing that needs to be emphasized. You can see that the Reserved and Mojito brands are growing by 1 digit only. This is because those brands, well, the customers of those brands are moving to online sales as online stores the fastest. The Reserved and Mojito customers, yes, these are the people that use online stores very fast. Crop House and Sinsay brands are growing very dynamically in offline stores. Before I thought that young people would be buying most of their items online, but it's not the situation because Sinsay Crop House customers buy more in offline stores, traditional stores, and more mature customers with more money buy more items online. So what was the sales according to regions? Well, the sales grows very fast outside of Poland, 26% growth. Also Russia and Ukraine, dynamic growth, 27%. Poland is quite saturated, therefore the growth is only 4%. And the total sales that grew by almost 15% year on year in the third quarter. On the right in the table, you can see the revenues per square meters, and you can see that sales in stores is lower by 2% year on year. It's because we have bigger stores and the sales per square meter is a little bit lower. But at the same time, we've got lower cost of those stores. On the other hand, the total sales, when we put together online and offline store sales, the growth is over 3% per square meter. An important factor that Eastern Europe, Russia, Ukraine, this is a dynamic growth per square meter, revenues per square meters. Well, this is because they are growing in the local currencies, but at the same time, the currencies last year were quite weak, and this year they are becoming more and more strong. Now let's move on to the profit margin. In terms of seasons, the third quarter always comes back with a lower margin because we have sell-offs during the holiday period. Well, we've accelerated the exchange of our collections. So in August, we had already autumn collection. So we have some growths year on year, but usually the third quarter is a little bit weaker. And now a couple of words about our gross profit margin, or how the US dollar impacts our gross profit margin, because this is the subject that is quite interesting. Well, it will take a little bit of time to explain this. So we have the collection that we make in Poland, Romania, and Turkey, and we use euro or Polish zloty with our suppliers or producers. But we also have the items that are made outside of Europe, and the currency there is a US dollar. Let me use the example of one T-shirt to illustrate, to show you the whole cycle from the order until it is sold. So, on average, 6 months before, we set the terms with the factory. So we set the price, we set the design, the materials, fabrics, and so on, and the price in US dollars. And this is when we ask the factory to print out the labels. And we've got prices in various currencies, for instance, in Polish zloty, in Russian ruble, and so on. And when we set this price, we use the budgeted currency exchange. So we know how much we will spend to buy dollars, and we know how much we will have to pay for the item and how much it will be costing in the store. And then we have a ready item that comes to Poland. And for instance, today on the 19th of November, it enters our warehouse. It comes with an invoice, and then we take the invoice and we calculate the money into Polish zloty. And at this moment of time, this item becomes our inventory, and we know the price of purchasing an item in Polish zloty. So we have the price on the product and we have the cost of purchase of the item, so we know what the margin will be. And then we have the distribution across our stores, online or offline, and we sell the item during the coming weeks, whereas the payment comes on average 4 months later. And now, taking into account the hedging, because we are hedging the period since the time we receive the invoice and we know what kind of money we will have to pay. And then we buy a forward contract that will be settled once the payment is executed. So we have three exchange rates. So budgeted currency exchange rate, So there is an FX at the time of purchase and then FX at the time of payment. So we are hedging the whole situation that we don't have the difference between various times. And this is connected, of course, risk. And often I get the questions, what were the prices that we were paying when we were buying those items, how that will influence the situation. So this example of one T-shirt is really nice, but the most important is the sentence below there, because we buy those T-shirts on everyday basis. Every day we accept the items to our warehouses. Every day we distribute it over our stores. We do it continuously. We buy it on everyday basis, not once a month or anything like that. So this is a risk that is spread over the time. And now, when we take into account the budgeted exchange rates and the price of US dollar and the currencies that we use to sell our items, well, we try to manage our prices in such way that we are able to reach the margin that we provide in our guidance. What is the impact of the US dollar? Of course, there is an impact when there are some peaks and downs. So we buy more expensively or cheaper, but those changes, rapid changes, are spread over time, so they don't impact our business that much. Of course, if the long-term prices change, we change our prices as well, our pricing policy. But our policy of managing margins is as follows. So before we plan the margin at first, so at the time of budgeted currency exchange, we plan the margin, and in the end, it is accomplished. Now let's move on to operating costs. Cost of own stores went down by 2% year on year. Two basic elements. So rentals and HR costs are lower year on year. Well, we've got bigger floor space, but also a better rental prices. But on the other hand, we have RFID and better management, inventory management in our stores. Therefore, the HR costs went down. Some of the costs are moved, outsourced as well. So therefore, we have also external services costs, energy costs, or costs connected with construction and materials. So the costs dropped by 2% year on year, but the total cost, SG&A costs per square meter, are more or less on similar level year on year. And now the result after the 3 quarters, growth of sales 15%. The cost is growing slower, 12%. So we use the leverage, and the operating profit is 147 million. So it's much better than previous year. We also have the FX gains and losses. And well, the price of US dollar against Polish zloty changed. The US dollar became more expensive, but therefore the situation. So our liabilities also grew, connected with IFRS, and the net result in total was almost 20 million. And growth of sales 12%, lower growth of cost 8%, and the operating profit is over 20% better year on year. Now, let's move on the trade liabilities and finance inventory. Well, the inventories were high, over 2 billion zloty, so similar to the previous quarter. But don't be worried. We don't have old collections as at the end of this quarter. They've been sold out in July and August. So what do we have here? we still have the collection moved by 1 month, which resulted in the growth of inventories by 300 million zloty, and also because we open many Sinsay stores, so we need to gather all inventories before the stores are opened. The stores are being opened right now. So we have 100 million zloty worth of inventories for the opening of the stores. If not those two things, our inventory level would be just as in the previous quarters, so 1.6 billion. So this is connected with our rapid growth and the changing policy of inventories in stores. But the good thing is that the working capital is quite fine. We got over 2 billion zloty of the trade liabilities. So we don't use cash for the trading purposes. And the net cash was about 600 million zloty. We have surpluses, cash surpluses. This is the kind of company that we are, but we need this cash to invest. And this year we spent 237 million zloty on capex, the biggest amount for many years. We also have investment in the infrastructure and logistical centers. This is the gray area. So now, recapitulating 9 months, we are very happy about our foreign revenues and domestic revenues. The foreign revenues exceeded domestic revenues. We also control the cost of our stores, and we are a safe company without debt. And now let's move on to the most important corporate events. What are the key events? Well, we've opened a pan-European online store, and we also opened Ukraine e-commerce. We also opened the e-commerce warehouse in Romania. And we had a very successful campaign with our new celebrity, top model Kendall Jenner. And another piece of information, important one, we've opened the 25th market for offline sales. So we made our entry in Finland. Now, Finland. This is part of the Western Europe market. So we've got Germany, the UK, and Finland. But the difference between Finland and those two markets is that in Germany and the UK, we've opened only reserved brand stores, whereas in Finland, we've opened our 5 brands at the same time. A new shopping mall in the city center in Helsinki, near the train station, near everything that is happening. We are very happy about this shopping mall. And the revenues after a few weeks are actually exceeding all expectations, so we are very optimistic about this country. And pan-European e-store. Well, the main goal here is to increase our revenues and to strengthen our presence on the markets that we are operating already. But because this is dedicated to the Western Europe, we want to get to know the customers better. And in the future, the markets that operate well online, that are doing quite well in terms of online sales, then they may also open the traditional stores. These are, for instance, Italy. And well, after we've opened our stores in Finland, that showed us that actually the situation that we have online stores and offline stores together, well, this is a very good situation because they support each other. And the revenues are growing. And our support, so e-commerce supports, this is the warehouse that was opened in Romania. That is, this warehouse was dedicated to the Western, to this. What does that offer to us? When we deliver to Romanian customers, we save money, of course. But because the parcels reach the customers quicker from this warehouse, well, the customers buy the items more willingly. So the faster they get the items that they've ordered, the more likely they are to buy our products. And now a slide that shows you our warehouses. We have the Bucharest one, we have the Gdańsk one, Stryków one. We have the e-commerce warehouse near Moscow, and we will be opening a new warehouse for e-commerce in Bratislava. And Pruszcz Gdański, this is for the offline sales for Europe. And near Moscow, 4 Russian stores, and the planned one that will be open in Brześć-Kujawski. I will be talking about Brześć-Kujawski more in a moment, but now let's move on to the reserved campaign with our top influencer, Kendall Jenner. Well, that was a very successful campaign. In media, well, we were present online, in internet, and in television, and that was a complete success. 20 million views so far. Well, that was the most successful campaign so far. We are very happy about that. And another very important subject is the CSR and the sustainable development. Recently, we've published our sustainable development strategy 2020-2025, and we have 4 main pillars that are connected with our strategy. So the most important ones are the eco-aware product and production, and actually growing that we work on the safety of the production as far as the fabrics are concerned, and the conditions of working are concerned, as well as actually eliminating plastic from our collections. Well, we've eliminating it from the stores in terms of the packaging, but we are working on reducing plastic from our parcels as well. Today, especially in our industry, the sustainable development strategy is a key strategy. It's immensely important. It is required by our customers, but also by the industry in general. So we are part of those changes that are happening right now. And the third part of our presentation, the plans for 2019 and 2020. Let's start with 2019. Right now, we've got 3 columns here. So the starting point, December in 2018, this is when we start. We show you our new goal target in the end of December 2019. And because we change our trading year, well, the point of reference will be the end of January 2020 as the end of the trading year. Therefore, we show you 3 columns. But let me say this. You can see that in January 2020, we show a lower amount of floor space in terms of square meters than before. But this is actually normal because all stores keep all companies keep their stores open until the end of December, and then the contracts are terminated, expire, and they are renewed. Therefore, the changes in the floor space. A quarter before, I was showing you that we were planning to grow our floor space by 14%, but we are accelerating, and it will be 15%. The growth in Poland is small, but the growth of floor space happens mostly outside of Poland, Russia, Ukraine. This is where we develop quite dynamically, expand dynamically. And checking the brands, you can see the tendency, a trend that will be repeated in the future years. So the brands that sell best online, so Mojito and Reserved, well, the growth of floor space is 1 digit, but the growth of floor space will be happening faster. in brands that are dedicated to young people, so Sinsay and House and Mojito. And now dynamic online sales growth. Well, we stand by our goal, 20% growth, because we want to reach this 20% growth as compared to the total sale. This is quite ambitious goal, but we have countries such as Romania or Hungary that reach 30% against the total sales. So we have countries that actually completed this, reached this goal, and now a shift in fiscal year. Well, let me remind you that this fiscal year will take 1 month longer. So we started on the 1st of January 2019, but we will finish it on the 31st of January 2020. So the fourth quarter will be 4 months long. So October, November, December, and January. And then actually the cycle will be like that. We will start in February and end in January. This is consistent with our operation because we start with new collection in February and end with sell-offs, sales in January. Because our year will end in the end of January and the results conference will take place in April, then we will have quite a long break without communication with you because this is mid-November today, and the next meeting should happen in April, so it will be nearly 6 months without communication, without any meetings with the analysts, and we've decided that this is not a good situation. So we've decided that after the initial results are out, we will have a very short meeting or teleconference in the beginning of February. So in the beginning of February, we will be reporting some information. It will not be a full information. This will be the key information concerning the past period. I know that you have been running your models, your tables, financial lists for many years, and they use the 12-month long calendar. And we want to offer you the opportunity to actually wrap up your lists, your models, January till the end of December. So we will be reporting some information there. But on the other hand, you will be able to start creating your new models starting February 2020. So we plan to publish the preliminary initial results after 12 months in the beginning of February. This will be happening in the beginning of January, and then in the beginning of February we will be reporting on after the whole period, 13-month long year, and then we will have a meeting with you in February to report the initial results, and then in April we will have a full presentation during our meeting. And now the targets, business targets for 2019-2020. Well, we stand by our targets connected with the revenues, with the positive LFLs and online sales and the growing floor space. We will have two-digit growth of sales year on year, but the guidance for the margin should be a little bit lower by 1 percentage point. Well, we go down to the level of 52-53%. This is due to a faster growth of Sinsay brand, and well, Sinsay comes back with lower margins. Still, the cost should be under control. This is our priority, and we would like to keep the debt level below the cash level. So we want to have net cash. We would like to continue this situation. Now let's move on to the 2020. So the floor space will grow by 16%, more or less, and we continue the trends as this year. So small growth in Poland, 4%. Mostly the floor space will grow outside of Poland. And similarly to this year, also Mojito reserved brands that are performing best online. Just one-digit growth of traditional floor space and the young brands House Mojito, since they will be growing faster. We will open in the second half of 2020. We will open our operation in Macedonia, and now Sinsay. Sinsay is our the brand that we've introduced in 2013. That is a very well developing, performing brand. It is liked by our customers, and because of the levels of the prices, we can saturate the market with this brand than with any other brand. So we are planning to actually expand the products in this brand, and we want to develop not only in the shopping malls but also in smaller cities, so in the stores that are close to the main streets. And another important element of our strategy is the RFID technology, so electronic clip or label. And with the help of this technology, we are able to perform faster, so move the items from the warehouse to the store. So the performance is much better. Well, the tests show that this is 3 to 8% of the improvement. 3% is quite easy to achieve, and this is our goal. Another element that can be achieved very fast is the decreasing cost of HR in the store, because we need less hours to actually clip the items, and the processes are shorter. So that all the processes in the back stores and in the stores are shorter. So the total cost of the technology this year for Reserved is 30 million zloty in total. When we cover all brands with the technology, well, the cost will be twice as much, but half of those costs will be actually returning, giving us a return in the form of lower costs. So this will be connected with new savings as well, such as bringing the items from the warehouses to the store, or stock taking will be quicker and cheaper, and a better performance in the stores as well. And the most important element will be introduced next year. We will be using the stores, our warehouses, that will be delivering the online orders to the final customer. So with the help of this technology, because we will have quite a good knowledge about what is actually in the stores, we will be able to deliver to our online customers from the offline stores. Now let's move on to our investment and the Brześć Kujawski Center warehouse. A change happened here. Initially, we said that we will be constructing 100,000 square meter warehouse worth 400 million zloty, but we've changed our mind. We've decided to construct a bigger warehouse in a better equipped, more modern, so the cost will be higher, 860 million zloty. And the growth is mostly due to the fact, that the material cost is growing, the labor cost is growing, but the main reason for the more expensive warehouse is the equipment. Modern machines that are just being introduced on the market, and we said that we want to invest more into capex so that in the future years we can benefit from it and lower the cost. And this is the table illustrating the capex in the coming 3 years. In total, we will invest 3 billion zloty, 1,100 million zloty next year, and 1,200 million zloty in the second year, and a lower amount, 800 million next in the third year. This is connected with the construction of the new center in Brześć Kujawski, but also with our headquarters construction. you can see the stores over almost 2 billion zloty investment in stores. 860 million is Brześć Kujawski and 150 million in the offices. So 3 billion zloty comes to 3 billion zloty investment, 2 billion own money, and 1 billion we would like to use the loans and bonds. And Brześć Kujawski, well, the investment will take 3 years. So we will start in 2020, one building worth 200 million. Then we construct another building, an installation of machines, and investment in machines in the third year. So in 2022, this warehouse should be operational. How do we want to finance it? 560 million zloty from bank loans, but the loan here has been set with the bank. It's been settled. We need new loan for the machinery because this loan will be offset by the Netherlands government. We will have the guarantee for payment. It doesn't seem to be a problematic. And then we would like to issue bonds worth 300 million. These will be 5-year-long bonds. This will be the senior bearer bonds, and they will be used to actually spend on the investment in Brześć Kujawski, 300 million zloty. And this is the schedule. Today, this is the very important day because today we are starting book building process. It will actually last until today, and the investors will be able to sign up for our bonds. And the day after tomorrow, we will have a decision what will be sold, how much, and according to what conditions. So mid-December, we plan to settle the transaction. And with this bond issuance, this is a testing issuance. We focus on the price, definitely focus on the price, and we will know how we did very soon, and the opportunities and risks for 2020, 2021. What's ahead of us? Well, first of all, the collections, good collections that are matching different markets, customers in Western Europe, Eastern Europe, Southern Europe, and individual inventories on market, depending on the market, on the stores, and so on. Good collections that should perform well and give us good LFLs, and growth in e-commerce and growth of floor space should return a double-digit growth of revenues, growth of sales. Again, an important element, RFID technology that help us to decrease the cost and increase the sales, which should translate in the end into an improved operational profit. And that's all from me, ladies and gentlemen. I'd like to thank you so much for your attention. And now it's time for a Q&A session.
Maria Mickiewicz, PKO.
Maria Mickiewicz, PKO. I've got 3 questions. Let me start from the first one. It concerns Sinsay brand. Well, this brand is supposed to be responsible for almost 2/3 of the growth of floor space next year. And we've heard in the comment to the performance, well, a lower profitability on the level of the first brand. Well, this is more effective brand in terms of costs. What can we expect from the profitability on the operational level? Is it close to other brands, or maybe it differs much from other ones? Well, this brand, in terms of the operational profitability, it adds to our business. Well, it's got a lower first margin, but the cost of this brand, because of cheaper locations, well, the profitability on the operational level is better than the average for the group. That's why we accelerate its development. That's why we invest in it. And it also enters new markets, smaller cities, and it helps us to penetrate the market in different countries. So it's a big opportunity for us to focus on this brand. The second question, now the perspectives, the outlooks, forecast for floor space, for the revenues per square meters. Today we've heard that the cost of salaries should be growing according to one-digit growth. What can we expect in terms of sales next year? Now, taking into account the growing cost of salaries, but with the help of our technology, RFID, because our employees are more productive and we've got bigger sales space, and because quite a large portion of our operation is happening outside of Poland, where the salaries are not growing that fast. Therefore, we agree that the salaries will be growing next year according to one-digit space, 8 to 9%. But in the cost structure in our company, salaries are not the main item. Most of the time, these are the rentals. So the total SG&A cost per square meter shouldn't be higher than 3% in terms of growth. And the third question on the e-commerce. We can see that your goal, three-year goal, is quite ambitious, 20%. And now the question is, could you actually highlight what are the appetites in terms of this year, maybe the share in the total sales or the dynamics? Because, well, those dynamics should be two-digit. Yes, definitely two digits. We don't really have certain plans, detailed plans. We are still discussing them, but we're talking 30 to 50% growth year on year. Now, taking into account the fact that we are making our entries in the new markets, we have potential there. We can actually develop very fast. We've started operating in Ukraine, and that started to perform very well, especially online. And we've got also some markets that have good potential for further development. Let me tell you this, that our first market is Poland, but Poland is half of the whole sales. Other markets are growing quite fast. And the third market is Germany, then Russia, then Romania in terms of e-commerce. These are big markets with huge potential. What's important for those markets is the fact that we should find out the most expected approach to our customers in terms of service standards. In Germany, the e-commerce wasn't growing that fast before because we didn't have this special Klarna type of payment that lets the customer in Germany pay 2 weeks after the item was purchased. Before, we didn't have this payment option. We've been just using bank cards or cash or bank transfer. And it turned out that the fact that we were missing this payment option was the key element of our strategy, adding this payment option, and then the sales just grew tremendously. So, well, we just have to check market after market, what are the expectations in Czech Republic, in France, or in Germany. So we still have to go through this path and actually start and do the localization and find out about the expectations of the customers. So we will be focusing on the growth of foreign markets. Thank you. Good afternoon. I have a question about the FX gains and losses, especially with regard to US dollar. Is there a chance that they will actually change? And now about the write-off for the tax, is this all or anything new is there? So the first question, How about the trends, about the negative differences in FX exchange? Yes, well, the situation may be reversed, so those differences are reversible. Now, about the tax, I don't really know the situation completely because the situation is dynamic, so I can't really answer whether there will be a write-off or not. And the third question, which part of the capex will be used for the stores renewal? Maybe 35, 40%. So this is for the renewal of stores. Are there any further questions? Adam Szafrański, PKO BP. I have a question about e-commerce. Well, I'm sure you've started to calculate the profitability in this part of your operation. So my question is as follows. What is the value of the returns? Because the market says that there is a lot of returns and the cost of servicing those returns is quite high because, well, the selling process is automated, but the returns are quite physical process. So how are you planning to automate it? Well, the profitability of e-commerce, as long as we've been operating mostly in Poland, well, the profitability of e-commerce was higher than the average for the group. The farther we go outside of Poland, well, the cost is growing, logistical growth is growing. Well, the profitability is going down, and in recent time, it has been lower than the average for the group. So therefore, our efforts will be focusing on building a scale for a country. So for instance, let's focus on Romania. Building this kind of scale in Romania helped us to open this warehouse in Romania. And after opening, 1 month after we've opened this warehouse, we've seen that the cost of servicing online customer in Romania is 6% lower as compared to the situation when we were sending parcels from Poland. In the coming weeks and months, we will be working on the procedures and processes. And, well, according to our calculation, the cost of servicing the customer in Romania will be 20% lower as compared to the situation today. So moving on to the level of the country, we are able to decrease the cost in order to increase the profitability. And the second part of the question, returns. Well, definitely, we are in this part of Europe where the returns are not that big. This is about 25% of the sold goods are returned. But the situation differs market by market. So in Germany, for instance, the returns can be as high as 60%. In Poland, this is the 23%. The further east we go, the lower are the returns. Well, the customers are learning, so the returns will be growing. The number of returns will be growing. But definitely, the customers in the East, they use different kind of payments. They have less money and they are more cautious. So the returns are not as high as in Western Europe.
Dobrze, proszę Państwa.
Well, ladies and gentlemen, we have one more question, and this question has been asked by our online viewer. So the first question, what is the difference between gross margin between the Sinsay and the average margin in the group? 4 to 5 percentage points. Let me recapitulate that on the operational costs. The cost has decreased as compared to the average in the group, so the margin is higher than the average in the group. How many years do you need to return the investment in automation in Brześć Kujawski? Our financial forecasts show around 4 years. So the higher capex should come back to us in 4 years. And the third question is the difference between the amortization and corrections and in MMFS can be repeated in the future. So IFRS 16 is a difficult subject for everyone, also for us. Half of our rentals are according to this procedure, because we've got, for instance, rentals that are shorter than 12 months or 12 months long and then renewed, or the rentals that depend on the trading level, so they are not under this procedure. So we will be, the more rental contracts will be signed as a variable option, well, the less this procedure will impact us. And this is what we are expecting, that the situation improvement. All right. Since there are no further questions, well, thank you, ladies and gentlemen, for joining us today, for your attention, because this is this year's last conference. Let me wish you a great December and wonderful Christmas time and a great New Year. And let's see each other in the beginning of February 2020. Thank you and goodbye.